Did you know over $200 billion just flooded into crypto? That's the current total market cap of stablecoins, hitting a record high and signaling that major moves could be right around the corner. Historically, when stablecoin liquidity surges like this, Bitcoin and the broader market don't stay quiet for long. In this video, I'm diving into how stablecoins reach this all-time high and why it's a signal you can't afford to ignore. I'll explore the competition between Tether and Circle, the two giants driving this explosive growth. Plus, I'll explain why the $43 billion sitting on exchanges might just be the catalyst for what's coming next. The crypto market has experienced a significant increase in liquidity over recent months, driven primarily by the growth of stablecoins. Stablecoins are cryptocurrencies pegged to the value of fiat currencies, most commonly the US dollar, and their total market capitalization serves as a key indicator of available liquidity. Last week, the combined market capitalization of all USD-denominated stablecoins surpassed $200 billion for the first time. This represents a $37 billion increase since the rally that began in November, an impressive expansion in just a few months. This matters a lot because stablecoins provide the capital necessary for trading, lending, and other activities within the crypto ecosystem. They act as a bridge between traditional finance and the world of crypto, offering stability that facilitates seamless transactions. Historically, periods of rising stablecoin supply have coincided with bullish market conditions, as they enable greater participation and purchasing power. This recent growth suggests that the market is preparing for increased activity, potentially signaling a shift in investor sentiment and behavior. Two stablecoins dominate this landscape: Tether's USDT and Circle's USDC. Together, they account for the vast majority of stablecoin market capitalization, and their individual growth patterns reveal important trends shaping the market. Tether remains the largest stablecoin by market cap, currently standing at $139 billion. Since the beginning of November, its market capitalization has increased by $19 billion, a growth rate of 15%. This steady rise reinforces Tether's position as the primary source of liquidity in the crypto market, widely used across centralized exchanges and decentralized platforms alike. Its dominance stems from its long-standing presence and widespread acceptance, making it a cornerstone of crypto trading infrastructure. However, Circle has shown even more striking growth in recent months. Its market capitalization has risen by $17 billion since November, a remarkable 48% increase, bringing it to over $52 billion today. This surge indicates that Circle is regaining significant traction after a period of slower growth relative to Tether. The reasons for this could include increased adoption by institutional players who may favor Circle for its audited reserves, or renewed confidence in its transparency and regulatory compliance following previous scrutiny. Another factor might be Circle's partnerships with major financial entities, enhancing its appeal in traditional regulated markets. Regardless, the combined growth of these two stablecoins highlights a broader trend. More capital is entering the crypto market through stable channels, setting the stage for potential price movements for Bitcoin and the rest of crypto going forward. If you're finding these on-chain insights valuable and want to stay ahead of the game, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. Now let's dive back into the analysis. Beyond total market capitalization, the distribution of stablecoins provides further insight into market dynamics. A notable trend is the rising amount of stablecoins held on centralized crypto exchanges. For Tether specifically, the total value deposited on these platforms has reached an all-time high of $43 billion as of today. Back in November, this figure was $30 billion, meaning we've seen a $13 billion increase, or a 41% jump, in just a few months. This is significant because stablecoins on exchanges represent readily available liquidity for trading. Unlike stablecoins held in private wallets where they might sit idle, or in decentralized protocols where they're locked in smart contracts, those on exchanges are typically poised for immediate use. whether to buy Bitcoin, Ethereum, or your latest degenerate meme coin. The growth in this metric is a strong indicator of heightened trading potential. Historically, increases in stablecoin reserves on exchanges have preceded periods of elevated crypto prices as they reflect capital waiting to be deployed into the market. This $43 billion in Tether alone underscores the scale of liquidity now accessible to traders, dwarfing previous highs and illustrating the market's evolving capacity. If this trend persists, it could amplify market momentum significantly, especially if paired with rising demand for major cryptos. Finally, let's consider how these trends might influence Bitcoin and the broader crypto market. One useful metric here is the liquidity impulse, defined as the 30-day percentage change in stablecoin market capitalization. This measures the speed at which new liquidity enters the system, and it often acts as a leading indicator for price trends. For Tether, the liquidity impulse has recently turned slightly positive, following a contraction of 2% at the start of 2025. While this shift is modest, it suggests that Tether's growth is stabilizing and could accelerate further if external catalysts, like regulatory clarity in the US, continue to improve. In contrast, Circle's liquidity impulse is far more pronounced, currently expanding at a rate of 20%, the fastest pace in at least a year. This rapid growth signals strong momentum in Circle's adoption and circulation, potentially driven by its appeal to institutional investors and DeFi platforms alike. Historically, when the liquidity impulse for major stablecoins accelerates, it has been associated with upward pressure on Bitcoin's price. While correlation does not guarantee causation, the current data suggests that the conditions for Bitcoin's next upward leg may be forming. The interplay between stablecoin supply and market demand is complex, but the numbers indicate a growing pool of capital ready to fuel activity. If stablecoin liquidity continues to expand, particularly on exchanges, we could see heightened market activity in the near future, potentially driving volatility or sustained growth, depending on broader economic factors. So, to wrap things up, the cryptocurrency market's riding a wave of fresh momentum driven by stablecoin growth. Their total market cap hit over $200 billion, up $37 billion since November. A massive liquidity boost fueling trading and more. And it's the top two stablecoins that are leading the charge. Tether is up 15% and remains the go-to for liquidity across exchanges and DeFi. Circle, on the other hand, jumped 48% to $52 billion, showing big confidence, maybe from institutions, pumping capital in and setting up big moves. What's got my eye is Tether's $43 billion on exchanges, a 41% leap from $30 billion. That's cash ready to roll, waiting for traders to act. Historically, this build-up hints at momentum, prices could follow, and the market feels primed for something lively. And that's all for today's analysis. Want more in-depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.